Welcome back. While banks may have washed through some of the hit that they took from residential real estate loans, there's another dead loan zone, so to speak, that needs to be cleared out, and that's commercial real estate. Just how vulnerable are the banks? One of the biggest commercial property deal makers in New York City says he's concerned. Kenneth Laub is with me here. You've been in this business 5 decades now. You've been through a number of these cycles, boom and bust. Where are we in this process now?
Well, let's differentiate the prior decades from where we're at today, because it might help your audience to understand. In the boom and bust periods that you alluded to a moment ago, we were talking about supply demands. We overbuilt or we underbuilt. It was a landlord's market. It was a tenant's market. We weren't talking about a credit crisis. We weren't vulnerable in different ways as we are today. And that is a huge difference that has an impact. Add to it a 10% unemployment and translate that into available office space around the country and 40% reduction of rents around the country, and it makes us quite vulnerable.
So what we've heard telegraphed here for basically over a year is that commercial real estate is going to be the next so-called shoe to drop, but it's yet to drop. What you're saying is that there's a difference this time around, but just when are we going to see commercial real estate follow through in terms of being a problem?
Okay. First of all, Margaret, commercial real estate is always the last to feel it and the last to come back. That's the way it's always been, and it won't be any different this time. We're going to start seeing it sometime in the next 2 to 3 years in a major way. We have $1.5 trillion in debt due over the next 4 years, and the way we're going to see it is going to vary. Many of the real estate developers that are in trouble on some of their properties are also the same parties which have the most capital or have raised significant capital recently to get them through this difficult period. And they may be the vulture players when we come out of it. Some of the REITs, the Vornados, the Boston Properties, the SL Green, some of which might have had their own difficulties, will be major players. It is really quite an amazing thing. You must talk about individual situations or individual banks for me to give you more precise answers.
Well, where are you seeing some of those opportunities then that you're alluding to?
Sure, absolutely. Take our hometown, New York. There are tremendous opportunities that are going to develop there. We have now currently 48 million square feet of available office space in New York. I can't remember anything close to it in the past. And that doesn't include the whisper space, which I define as space that would be available from companies if you came to them and said, can you free up some of your space?
Right, Cushman & Wakefield says it's, 38% higher than last year.
That is an accurate statement. That is an accurate statement. I would agree with that. And I would say that we haven't hit the bottom also. However, you said, where are the opportunities coming from? And the opportunities are going to come when unemployment stabilizes. If you take the unemployment rate in this country and you apply 200 square feet for every person that is out of work, you suddenly come up to these hundreds of millions of square feet of available office space in this country. That is going to have a taxing effect on developers and on the institutions that hold the debt on these properties. And so what we're at is the beginning stage of the renegotiation between some of the parties that hold these mortgages and the developers. And this is going to have different effects depending on who we're talking about and how it plays out.
Well, you're a player here in New York, so I want to ask you what you think in terms of the time clock ticking with Stuyvesant Town, because there has already been a missed payment here. They can't go ahead and raise rents to make up the difference. Where do you get the money to pay down that debt? All
right. Well, first of all, I assume you're aware that Concord and Wachovia have placed them in foreclosure on the mezzanine debt.
Right.
They've got $200 million of rent that they increased and deregulated, and they're going to have to deal with that issue. I believe that politically, that is a very serious hot potato. And I do not, even though I have tremendous respect for the Tishman Speyer organization, I do not believe that they will ultimately renegotiate and stay in place for a variety of reasons on that particular property. I see other people coming in.
Really?
That's my personal opinion. I could be wrong because, as I said to you, Tishman Speyer are very ingenious, competent people.
But they missed that $16 million payment. We could hear something. Do you think we'll hear something this week?
I think you're going to hear, and Councilman Garodnick has been forceful in his views on that as well. Yes, I do think you're going to hear something shortly on that, and that is not the only Tishman Speyer situation which is coming back to haunt them. They have other situations around the country that they're dealing with. Let me make an observation here. The bankers today are like the bookies of the world. They are earning fees, placing debt, renegotiating debt, and simultaneously they're trying to syndicate and get this off their books. That's their objective. And so as this plays out, and it takes time for these things to get played out and to negotiate, you're going to see a variety of different solutions and new solutions, including potentially renegotiation of principals with the mortgagees. I am telling you, you haven't seen the tip of the iceberg as to what's going to happen here.
Wow, not the tip of the iceberg. You do think prices are going to continue to fall from here
I think that they will stabilize reasonably soon. We're pretty close to the bottom, and the upturn will take place as soon as we stabilize unemployment.
All right. Thank you so much for joining us and sharing your insight there.